right, there's the music. I'll turn the music off. No. All right, welcome to QuantBox Live, where we get our global macro on. Guess I should bring up the website. Stick with the routine, Wayne. Here we are. So, what's the point? What's the point of all of this? You're going to have confidence. Wait, what? Yeah, that's all it is. Oh, let's see. There we go. Yeah, that's all. Confidence. Oh, two. There was two live mics. Interesting. All right. Yeah, confidence, 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 confidence. What does that come from? Well, information. Really, ultimately, that's what it is. Um, you don't want that type of confidence where you say you're good enough, you're smart enough, and gosh darn it, people like you. Well, that's all fine and dandy, but you need the real type, right? The real type. And that means you've done the research, you've done the work, you know what you intend to do, and you set forth into the world with intention. And that will bring you confidence to get the job done. So, anyways, how do you get all that information? Well, we look at market sentiment, we look at inflation, employment, GDP, we do technical analysis, we look at open trade positions of institutional investors, but also retail investors. Now, we have to get them from two different sources, but we bring them together so that they're easily seen by our human eyes. And we also look at seasonality. Well, what does that mean? Well, what usually happens this time of year based on 20 years of analysis? Well, that's pretty good. That's good to know. Yeah, for sure. It's good to know. So, look, we have all the data. We pull it from governmental databases, we put private databases, and we organize it. So, this is the thought of the central banks, each major central bank around the world. This is their thoughts on inflation and interest rates into the future. So, with QuantBox, you're looking as far out as 18 months in the future. Now, you might be watching people on TV, experts, and they say, well, I think the Fed is going to do this, and I believe the Fed is going to do that. Um, and most of the time, they're telling you something different from what the Fed is actually telling you. So why don't you just listen to the Fed? Well, how do I know that, Wayne? Well, we have it here in QuantBox. This is from the Summary of Economic Projections. It comes from the staff at the Federal Reserve Bank, and we plot it out into the future for you. You also need to look at market sentiment. What is the underlying intrinsic trend? Is there proper correlation amongst asset classes? Well, if you were a subscriber over the last 5 or 6 weeks, you wouldn't have known that there's no underlying intrinsic trend. So if you've been losing a ton of money because you're like, wow, the stock market's up, so I need to do this. And that second thing doesn't happen. It's because, well, you didn't know. We knew. So is that confidence, is that knowledge worth $80 a month? I don't know. If you were trading $1 billion, yeah, you'd probably pay the $80. Maybe even a half a billion. Yeah. But to each his own. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So the AI alert service, I've been told, is ready. But I have to have the new week meeting with the developers. Supposed to be ready. Supposed to. So don't yell at me. Yes, you can yell at me. But anyway, so I'm looking forward to maybe some decent progress on that project. If the developers have lived up to their own expectations, then I will move on to the other development team, which will then hook it up to the service that sends the proper messages to your cell phone. So you get a text. Very cool. And also, there will be multiple emails a day, one pre-London, one pre-New York to show you what's changed in QuantBox. And then there's another one that sends you a report when the Commitment of Traders report comes out on Fridays. So you have twice a day pre-market emails. You'll have the COT on Friday afternoons, and then the real-time alerts when important things change. Cool, right? I mean, seriously. Cool. So here's another way of saying it. First of all, I'm telling you because a lot of people have signed up, and I'm like, hey, this is where we are. I guess the other thing to say is if you haven't signed up, I don't know. Next week, this will be 365 bucks. So if you're like, all right, as soon as this launches, forget it. You're not getting a founder's discount. Forget it. Forget you. All right. So last chance, Bubba. Last chance. Last chance. Yeah. Okay. All right. Nice, proper move on the 10-year yield. That's very good. That's a risk on play, in my humble opinion. That's good. So we were at 4.3 and now it's back down to, let's just call it 4.2. Is it a dramatic change? No, it's not a dramatic change, but it's a change in the right direction. But maybe it goes back the other way today. Who knows? But I'm okay to celebrate that. That's a small victory. That's just a skirmish, but nonetheless a victory. Oil tickling 80. Remember it's 68? It's coming around, coming around, coming around. Very cool. So up more than 10 bucks, which is really nice. And the thing is, can we get past the psychological level of $80? I've been bullish on this like for forever. And it's nice to see it actually doing its thing. Also, a couple of weeks ago, for the first time in a long time, months, I believe, I'm like, yeah, I think I'm bullish on gold. Gold should start moving. And it wasn't moving. And then I said it again the week after. I'm like, yeah, I thought gold would start to move, and it didn't move. But on the third week, yeah, on the third week, it finally started moving. Interesting. Um, QuantBox might score this as bad. You might consider it good, and it really depends on why the market is buying it. And it's hard for a machine to qualify. It can quantify easily, but it can't qualify why are people buying gold. We had some little bit of inflation tick up in a couple of places, and that would give the move, and that would be bad. But if it's like risk on aggregate demand for gold is going up because you're going to buy more gold, you're going to buy your sweetie a gold ring. Well, we have to dig that gold out of the ground and sell it. So, anyways, that increased demand. Okay. Boris says, Wayne, I have a question about stock market growth. What are the mechanisms for it to keep going up? Going up means there are more buyers than seller. Yes. But who's really selling the top of market and who's really buying? In that case, there's not really sellers at the top of the market. There's some profit taking at the top of the market. So the sellers are the bulls and there are no bears truly. Okay. Now you might get individual corporations, individual stock. So you mentioned something. I haven't read the whole thing, but regional banks. Okay, so then that there could be sellers on those, right? But even then, usually it's mostly profit take people that are in the stock that are just dumping it. They're not short selling. They're not short like we would short a currency. They're exiting along. Okay, so there's less bulls, and that's typical for the stock market. There's very few short sellers. Okay, it's actually kind of difficult to even do. So I wouldn't look at red on the screen for the stock market as bears leading the way. There are certain circumstances like weakness in regional banks, and suddenly that will attract some sharks, if you will. But by and large, I want you to look at the stock market. Red on the screen is just people getting out. And then along the way, people buy back in. Okay. So the stock market, you could say, statistically speaking, there are only buyers. Okay. And the current behind it, too, is that, and Jim points that out, too, with 401ks, which are retirement accounts, and all the different variations of them. Just imagine that the ETF and mutual fund business relies on the fact every month a, a corporate retirement account takes $500 off your paycheck and puts it into your 401k, which then goes into a mutual fund, no matter what happens. And so there's this underlying current of up is up is up is up. And like I was saying, statistically, how many market participants are actually borrowing shares of GE and short selling it? Like statistically, no. Okay. So you buy the dip and let it rip and take profit at the top. But even then, I would guess at least, and I'm probably way off here, but at least the market, half the market is passive, which means they never get up. So there's just this down, buy it back, down, buy it back. Okay. And that's take profit, buy it back, take profit, buy it back. All right. Let's look at the most important of these gauges. And right now, barely. So it is what it is. This, I'm sure, about Friday. No, you just lost me, didn't you? Huh. Hang on. I don't know why that happened. I didn't even have an internet problem. Hang on. Share screen. Boom, 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 boom. Okay, so there we are. We're back. And on Friday, actually on Thursday, I met with the swing trading group, and I'm like, look, I have a lot of worries about this bullish market, and in particular, talking about the stock market. We're at all these all-time highs. I have serious concerns. It's unseasonal, and we're at like triple tops. I'm like, look, I'm worried about it, but it's not bearish. I'm worried about it turning bearish, but it's not bearish. So I have to be strong or stupid, one of the two, and just stay with it. And then, of course, Friday, off the news, boom, they all broke to the upside. Cool. And so that's kind of being displayed here. Is it going to stick today? Well, that I don't know. Okay. It's only on this one time frame. And then maybe today, once the market opens, the daily mix turns to daily bullish. And maybe this turns from a 2 to a 3, and this starts moving bullish. And then we can feel really good about ourselves. So, it's good news, but it's not quite there yet. It's close. So, like over the last 30 days, yen is weaker than before. That's still good. There's lots of concerns on the yens. Okay. But gold is up, and I'm scoring this as bad. You could score this as good. I scored as bad where if you're buying gold, you're hedging inflation, and inflation is bad. But if you're trading it as aggregate demand, then you could switch your number. Okay. Dollars flat, yields are still high. See, compared, remember, we were 3.8. So over the course of a month, those yields are still higher than before, and that's still bad. But the S&P 500 is up, so that is good. But VIX is down, but not by much, so it's not good. But week over week, it's down 14%, and that's risk on. S&P 500 is up, that's risk on. Yields are down, that's risk on. And dollar's flat. So if you've been struggling with your currency trading, you're like, how come the dollar ain't going? You're betting on correlations that are typical, that are normal, that you would assume to be true. But in this case, your assumptions are wrong and you're losing money. Well, that I have a feeling if you're losing money, you lost more than $79. So you should have invested that money into QuantBox. Take a look at the scatter plot overnight. Bitcoin wants to go to an all-time high. Yeah, that's where Bitcoin wants to go. So since the Friday close, up 6. Shut the back door. That's amazing. So we're tickling all-time high, aren't we? Pretty sure. S&P 500 got a bid. Japanese stock market, I also believe at 40K. Is that right? Hit the all-time high there. I mean, higher than the 80s. Do you guys remember the 80s? Yeah, I was just at the Concours d'Elegance in Amelia Island, Florida, and they had a section of cars from Japanese cars from the 80s. And it was so cool. I'm like, I remember all these cars. It was just amazing. And to see them in mint condition, right? It was just really funny. I'm like, dude, this car is 1980s. You can't get more 1980s than this car. So, anyways, it was really cool to see the 80s again. Um, Lots of switches, a lot of plastic, a lot of fake wood grain. Pretty amazing. So, anyways, so the stock market is now higher than that. And those were the glory days of Japan, huh? So, anyways, they're struggling, their economy's struggling, but the stock market's way up. Could it be because the government is making their money worthless? Could be a rabbit, could be. So asset prices are going up. Yeah, very cool. So they're trying to create inflation, and there is a rumor again that they raise interest rates, not cut, raise. But it hasn't happened yet. But who knows? Now we're at the all-time high for the Nikkei. Do you like bragging to your friends that you trade the Japanese stock market? Like, but only in the Asian session. I'll trade Nikkei and usually some gold. Just fill the time before Jimmy Kimmel. Yeah, yeah, it's cool. People are like, really? Okay. Oil's actually come down a little bit off that 80 mark. Gold is down a little bit off the 2,100. NASDAQ flat, DAX flat, so on and so forth. Mostly risk on expected. So Friday was a big day. Be interesting if some of these laggards move over. To quote Moore, I think it was Moore calls them laggards. So is oil a buy a dip? Is gold a buy a dip? Well, that's how you want to look at this today. No, I thought we'd have the new calendar. I was going to open a new calendar, but no, I don't have it open. All right, too bad. We were supposed to have a new calendar. I think. Well, like, look, let me go through memory because I hate this calendar. Yes, ISM services. Yep, yep, yep. And then of course Wednesday is going to be ADP. Yep, yep, yep. Wednesday and Thursday though, Powell is doing his annual testimony to Congress and the Senate. Ooh. And he's probably going to say there's no interest rates coming imminently. The cuts are coming later. Okay, well that could be the sleeper move, huh? And then non-farm payrolls on Friday. It's a very interesting week. Like ISM services is killer, right? In of its own. ADP is just a scalp. Hey, we all love scalping. Okay. NFP is NFP. Yeah, yeah, yeah. But it's these Powell testimonies. Cool. And sometimes they're fun, the Q&A. Warren said to Powell, "So your intent is to put 3 million Americans out of work?" Like, is that the mandate? Yeah. Wait, it says right there on the wall when you walk into the Fed. Our aim is to put 2, maybe 3 million people out of work. He was so polite. He said, "No, ma'am. My intent is to protect the life savings of 327 million Americans," which was pretty good. I would have said, "Hey, you're the one that created the inflation, not me." So, anywho, so it's going to be interesting. Who knows how all this goes down today? Oh, and we have global dairy. That's going to be tomorrow, and that will move. Um, that'll move kiwi. I do have a better calendar coming for this, but also for the news service traders. And I thought I had a version of it open, but once again, I have way too many windows open. It's not on this window. It's not that window, not that window, not that window, not that window. Oh, well, I can give you a sneak preview of the calendar for traders. Calendar's just a calendar, right? Yeah. So here's how simple the new calendar is going to be. So tomorrow at 7:30, Australian GDP. Because I think New Zealand has the red stars and they don't have the Southern Cross. But anyways, yeah, that one's going to move the market. Okay. Wednesday, 9:45 a.m. my time. I'm going to want to trade the Bank of Canada interest rate decision. See, now it's organizing it by time, and at some point, this will actually start ticking down. So it'll tell you in 2 hours and 43 minutes and 16 seconds. But what Traders is doing is looking at all these news events in the past, looking and remembering how it moved 2 hours before and 2, 4, and 12, 24, and 48 hours after the news event, and it looks at patterns and then of how these markets behaved in the past for these events for the dollar pairs, and then looks for discernible patterns. So it's doing like 5 different things going back at least a year on multiple time frames and multiple currencies. So it's really doing like 200 things for every news event on the calendar. And then it says, oh, this GDP report has a discernible pattern based on. So now you have to multiply whatever number you're at with how many charts. Now you got to do it times 3 again, because then it breaks it down. Was the GDP number in the past greater than expected, as expected, or lower than expected? And looking at patterns. And if there's no discernible pattern, it doesn't matter if there's volatility. If you can't predict which direction the volatility is, then it's irrelevant. And so now this is the calendar going out the next 2 weeks. This is all you need to trade. This is part of the scalping tool, or this is actually called the scalper. And what it does is it tells you what direction. So, for example, if it comes out less than expected, what direction is Kiwi dollar likely to go? And then why? And then show me the charts in the past. Like on the 31st of May, right? In 2022, when it came out with a different differential, there's where it moved. And so it looks at all these things and then quantifies them. Isn't it just crazy that we have all these charts? This is the event candle, and there it is for every pair going back in history. Not so, right? So it gives you direction and time frame. Is it is it a scalp? Is it a day trade or is it a swing trade? So, anyways, that's coming in, and I like this calendar. We have a normal calendar, but this is like, hey, this is the one you should care about. You don't need the other calendar. But I put the other calendar there too. I mean, extraordinary, right? So, Boris, this one will tick down. Let me go back. Just I'll answer Boris's question. All right. So, this one will tick down. Okay. GDP, and it'll tell you 2 hours, 14 minutes, and 62 seconds. And it's ticking down and it's flashing. It's coming, Boris. It's coming. It's coming. And then when you're on this page, it's organized by less than consensus, greater than, apparently it's never been equal. It's never come out equal. So there's no data. So we already know that, which is great. So it's looking at all these things on all these pairs. And then, Boris, what'll happen is when the number comes out, let's say it comes out actual is less than expected, it kills everything else. And then it pops this sucker open. And now you only have all the past data in which it was less than expected. And then it writes out in English what you should do. And it's near real time, like a, a couple of seconds, right? A couple of seconds, not a couple of minutes. Oh, snap. You didn't expect that, right? Yeah, you're welcome. It's incredible when you have the data what can be done with it. So that's the scalping tool. Oh my god. And you're like, I thought it was just going to be pattern recognition. Well, all of that is pattern recognition, but on a different level, huh? Yeah, on a different level. Next level. All right. So yeah, well, just in case somebody on YouTube is watching this recording, go to tradars.co. Put your name on the list to be alerted when I launch, and it'll be 2 weeks. I guess I need to do that. It's going to be awesome. Telling you, it's going to be awesome. Okay, good. All right. So it's hard to figure out what's changed, huh? So if I can, I was going to open up an email. Anyways, I don't have any emails open. All right. If you have an email, yeah, if you have an email, you already got a report on Friday that reads this COT for you when the new data comes out and tells you what's changed. Isn't that nice? So it should be part of your Sunday/Monday routine where you sit down at your desk and you're like, okay, well, I want to review the commitment of traders report. And luckily, your assistant, your associate who tracks fundamental data, has written a report for you. Jim, here's the changes. And you're like, cool. And you just get a bloop. Now, that is part of the AI alert service, and that is being done. So the people that paid the $200 for a year, right? Um, it's already sent them a report. So you don't even have to do all of this work. But even then, you're right. You're still likely to miss stuff. So Jim said, I got it yesterday. You got it yesterday. You should have got it Friday, maybe Saturday morning. But really, I wonder what you might have got a weekly summary. I think I saw that where um, that something like that was sent. But anyways, you got it. That's all that matters, right? You might have got it twice, is what I'm saying. There might have been one on Friday, and then I thought I saw one yesterday, but they usually don't come out on Sundays. But yeah. So anywho, so that'll be changing. That'll be changing from a once a day to twice a day, pre-London, pre-New York. You'll get updates. All right. So money's still going into Kiwi. Okay. 4,000 bulls, but look at that, 750 bears. Now, This is different from our conversation on the stock market. These guys are actually selling. Um, there's a difference, and this is why we track this. So, like the S&P 500 is flat, right? Well, these are futures contracts, and 24,000 bulls and 28,000 bears. Nobody got out. More bulls bought, more bears sold. Nobody got out. There's a real battle going on here. But remember, this was Tuesday of last week. But this is the most recent data. On Tuesday, the open positions were reported to the Commodities Futures Trading Commission. .gov, it's a government agency. And then they compile it and then release it Friday at 4 p.m. And QuantBox Friday afternoon, once the data comes in, updates this. So it is the newest data. But this is interesting where nobody has taken profit on a position as of last week. Now, we had a pop on Friday, and that doesn't necessarily mean we got bulls buying. It could be bears capitulating, having all their stops. Okay. If you're a bear, what direction is your stop? Up. Bears would have been the ones buying on Friday, not the bulls. Bears, right, put in stop losses, and therefore the broker goes long to offset the already short position, taking them out of the market, and the price goes up. But it's not necessarily that it's the 24,000 bulls. Well, if these guys bail, it's going to go up. This is why it's good to know the information. Okay. Because you can tell why the market's moving, not just what direction, who's moving it. And my guess, like I can't prove it now, but my guess is in a week, we'll see that it's these 28,000 are short. This is the change. 28,000 more bears on Tuesday of last week. If those bears got out on Friday, the market would go up, even if bulls didn't do anything. Cool. Which means you could buy the dip. There might be a lot more upside. Let's say that nobody's pushing back, nobody's selling anymore. Would you like to know that? Would it change your attitude toward being a bull? You're like, wait, the market's going up and nobody's fighting. Well, you shouldn't be the only one selling, right? So, anyways, could be so that's how you read this. You actually now know. Like, for example, yens down slightly, right? Well, there's less bulls and significantly more bears. 5.3% more bears, more money actually selling the yen. That's real, honey. That's real. What does that mean? Yen pairs up. That's real. That's the money. Where did the money go? Less bulls, right? 5% less bulls, 5% more bears. That's a big swing. So that's the other way to organize all this, of course, is you're like changes long, changes short. You don't have to look at the net, but the net gets you, long versus short. Let me reset this so we can get the data. Boop. Cool. Okay. So again, this is the most bullish. Kiwi's very bullish. Okay. Aussie, not nearly as much. So 60-40 basically on Kiwi dollar long, where Aussie, people are still short Aussie significantly. So you're more bullish on Kiwi. Let's look at the bears. NASDAQ. People are starting to hedge. Okay. Now only 50-50. Remember how bullish NASDAQ was a few weeks ago? Okay. Mm, The market is significantly less bullish. In fact, we lost some bulls and added 20% more bears last week. What do you think? People worried? All time high? Are they worried? Yeah. Well, I'll tell you, when this technically turns bearish, you should believe it. You're like, what? 20% more bears week over week? That's it? Dude, 20% is a lot. It's extreme. So, yeah, we got to be careful. We got to be careful. This is a big week, too. Like I said, we have annual testimony by the central bank, non-farm payrolls. Could be a big moving week. Okay. This bearishness hasn't shown up yet, but we know statistically we need to be aware of it. Silver, less bulls, more bears. Platinum, less bulls, more bears. Okay. Yen, we already covered. Less bulls, more bears. Pound, more bulls, more bears. Neutral. Neutral, neutral. Euro, less bears or less bulls, less bears. People are getting out of. Gold, flat. Okay. So this is the flow that we're watching week over week. You can see when people are worried, NASDAQ is a -5, very heavily short. And then at the S&P 500, flat. It shows you that there's more beta exposure on NASDAQ, which means for every unit of move for the S&P 500, the NASDAQ will move more. It's got a higher beta. So if you're worried, and there's good reason to be, very often, like what I would suggest in our Council of Investment Advisors is that if we're in a period where we expect that high beta volatility, we can either take money out of NASDAQ and put it into a lower vol like S&P 500, or we can just say no new money into NASDAQ while it's volatile, and we'll buy something less volatile. And I I would not necessarily go to S&P 500. I would go here. And it, right? In this case, it even made money. Now, how could NASDAQ be so heavily bearish and Dow be up? Because they just did what I told you. They're not getting out of the market. They're selling volatility. They're selling the beta and lowering their volatility. Cool. And you can see it there. Where did the money go? Right there. Okay. Might be it's the beginning of March. You might want to spend some time going through the central bank forecasting tools and kind of aligning your satellites. I really like to use it for that. Just quickly see how things have gone for the week. Bitcoin just crushing it. We're at the all-time high. Holy smokes. Okay. Up 5.5% today, up 25% for the week. Well, if you had put $1 billion on it a couple of months ago, you would be rich. Gold up 3%. Oil up 2.5. Nikkei still crushing it. There's the 40K. Nasdaq trying to hang in there, popped on Friday. but 2% for the week. And then biggest losers, yields, which is good. This favors me a lot. That's part of my strategy. Good. I want this number to fall. I want this to be 3.5. Okay. Kiwi down, but remember, money had been going toward it at least part of last week. Money was right. So this might be a buy a dip scenario, although maybe you're worried about yen. This might be a buy the dip scenario, but maybe you're worried about dollar. Maybe it's a buy a dip scenario for Kiwi Swissy. What about Kiwi CAD? See, Kiwi's down for the week. These might be buying opportunities. It doesn't mean they're a dog with fleas. It might, but it also might be value. So it's your job now as a technician to go figure that out. What if you saw like three of these suddenly set up with bullish trade plans today? Well, it'd be meaningless unless you already wanted to buy. If you already wanted to buy and you're like, ooh, I might be able to pick up a value play on this Kiwi. I know institutional money is going toward Kiwi, but it's down across the board. Well, as soon as it turns bullish, maybe you're like, that's a dip. Okay. Okay. And you're like, so what's going on with some of these things? Doo doo. Okay. Not bullish. So your job is to pay attention to see if it changes to be bullish. Boy, is that pretty, huh? Nice and easy, clean chart. Cool. So is it bullish now? No. But if you wanted to trade like your knowledge of the COT, you say, well, prices are down, but flow is up. Okay. Institutionals bought it on the way down. Remember, they're buyers on the way down. What do retail traders do on the way down? Sell on the way down. Institutional investors accumulate. So they're accumulating as it falls. Your job, I think, is to notice when it goes from falling to not falling, okay, to all of a sudden it turns bullish. Should you start getting on this move? Well, you'd be trading with the help of institutional flows. It's like surfing. Okay, I want to check this because last week we had an error there and they said they fixed it over the weekend. So is Kiwi Swissy really neutral? Let's go take a look. Cross pairs. Yeah. Okay. And there's the same chart again. But okay. So right now it's still sort of 60-40 long Kiwi and 60-40 short Swiss franc. So it's okay. You can see how we can get to there, right? Where the market is positioned for this to go up, but it's not going up. And seasonally, it doesn't look great anyways. So that's where we get our mixed information. But we do know there was flow into New Zealand dollar. Was there flow out of Swiss franc? Let's just quickly check that. What happened with the Swiss franc? Okay. 64% of the market is short, and the flow was more short. 21% more bulls, 21% more bears. So it comes out flat, but there were more bears and bulls, you see. So it's still it's bearish. Cool. Cool. I mean, It's one of these things like that trade is not working, but the job is to figure out, well, what if it does start working? Would you even know? I want you to notice when I'm not around. Yeah. So we go out here and you're like, huh, should you be a bull? And the answer is maybe. So what you do is you go to your biased pivots and you're like, I'm a bull. I want day trades and I want midpoints. Yes, all of that. And your trade for the day is we're already kicking off the buy zone. So you could have done this a couple of hours ago or last night. And your trade plan for the day would be take it up to this is 54.27 to 54.38. So just above 54 for your day trade. And then tomorrow you'll want to pick it up over here. And of course, I already have that marked. Cool. That's it. I think we're done. Oh, that was beautiful. Huh? What a great mental workout that we do every morning, huh? Do you guys feel prepared? Got all the cobwebs all cleared out, ready to go. Got to go to battle, huh? Another day. Another day in the markets. Like I said, it should be an interesting one. We still don't have intrinsic trend. We're going to have vol. We don't have correlation. Cool. Well, don't be sloppy. Be choosy, right? Pick your battles wisely and you'll do just fine. And of course, I'll be here all day, every day. Yeah. So peace on earth. May the pips be with you. May your profits be above average. I'll see you soon. Cheers.